Hi guys, once again this is Alfred from binaryoptionstutor.com. Just decided to do a quick video on on one of my favorite philosophers. It's not going to be about trading at all. I want to talk about a great philosopher. You may have heard of him. His name is Yogi Bear. And frequently this philosopher would proclaim that he was smarter than the average bear. Now, I believe him because, for one, he was able to, set up a scenario where he wasn't saying he's the smartest bear. He was simply saying that if he took a sample, perhaps our good friend Yogi and four other bears, he would be smarter than the average. Maybe if you took a sample, our good friend Yogi and 19 other bears, still be smarter than the average. That's all. He's not saying he's the smartest bear in the world. The Albert Einstein bear could walk into the room or someone like that, and all of a sudden his dreams are dashed forever. That's all. So he says he's smarter than the average bear. Now, some of you are saying, what the hell is Alfred talking about? Yogi Bear, smarter than the average bear. I don't get it at all. At first I said I wasn't going to do anything that had anything to do with trading, but actually I am. Because today we're going to talk about moving averages, simple moving averages. Matter of fact, we're going to talk about repainting because I hear a lot of people talking about, well, does the indicator repaint? It's amazing. When I started binds, there weren't a lot of forums, and binds were new. Uh, Guys called them digital options. There wasn't but one or two places you could trade them at, and I was never into forex at that time, so I wasn't I wasn't familiar with forums, and I love forums. Don't get me wrong, because the forums are great. You can go in there, catch a vibe, see what other guys are talking about, bounce ideas off of other guys. Sometimes even maybe other guys will bounce ideas off of you. It's cool. But I hear a lot of complaints about quickly a guy will come onto a forum and maybe he'll pop up an indicator, and someone with 80% accuracy, someone's going to say, well, does it repaint? I want to talk about repainting today too. And I'm going to talk about lagging, because I hear people talk about it. Well, all the indicators are lagging. And that's why I started with my Yogi Bear thing and the averages. Here I've got 1, 2, 3, 4 numbers. 3, 8, 11. Put those together, we've got 22. 10 more, we've got 32. Okay? Take that 32, divided by these 4. Divided by the 4. Equals 8. So what's the average? 8. That's all an average is. You're going to have to accumulate the data from the 4 different prices to arrive at 8. What's my point? Of course, it's lag. It's an average. That's all. And let's say those were prices. Let's talk about repainting. Okay, well, the average we came up with here was 8. From our little 4 sample, we had moved from 11 to 10. And yeah, you could say, well, the actual numbers are going down, but maybe the Maybe the if we were to plot this out, then the SMA would be moving up. C is useless. But again, Yogi Bear wasn't trying to proclaim that he's perfect or he's the smartest bear. The only thing Yogi Bear was saying is that he's smarter than the average bear. And I believe that's something that the bear could live up to. And why am I going over these numbers? Is because sometimes we can, and this is just my opinion, sometimes now it's so quick and easy to pop up an SMA on a chart, but there's not really, you don't have the opportunity to have to plot the numbers and understand what they mean before you just see them on a chart and begin interpreting. I think your interpretations will get better when you understand with a deeper meaning what they are. One of my favorite movies, Karate Kid, and I'm talking about the original Karate Kid. I got no problem with the other movie, Jackie Chan. That was great too. Fundamentally well written movie. But in the original Karate Kid, Ralph Macchio, Pat Morita. Yeah, I guess I'm showing my age here. Uh, Ralph Macchio wants to learn karate, and he keeps going to Mr. Miyagi, and he's like, "Oh man, teach me karate. Come on." Mr. Miyagi goes, "No." Tries again, Ralph Macchio. He gets his handed to him. Enough until Mr. Miyagi says, "Okay, yeah, I'll teach you." And he immediately proceeds to getting the guy to wash cars, do his fence, row his boats, whatever. And one day, Ralph Macchio gets real upset and he says, "Man, what is this? You're supposed to be teaching me karate. Every time I turn around, you're just giving me chores to do. I'm sick of you. Screw you," etc., etc., etc. Okay, and then Mr. Miyagi goes, "Well, do do the white fence," and he comes at him with an attack, and he goes, "Okay, now watch the car," Yeah, he comes at him with an attack, and all of these things, people would call it muscle memory. He's building muscle memory, but the fascinating thing is Daniel was able to acquire a deep understanding of the moves by application. And I think sometimes we're able to just pop indicators on a chart, and I don't know, maybe it's harder to get a deeper understanding because back in the day you would have had to plot the indicators or plot the averages or plot the lines, however you want to look at it. When we started, there was no MT4. MT4 MetaTrader was very new. It wasn't MT4. It was MetaTrader. It was very new. And there were people talking about this new thing, MT4, and we like to build our own stuff, so we weren't really interested in using a third party uh, charting software. And what we would do is to gather the data, the ticks, and we would build our own candles. So I think this helped. There's a good and a bad thing. You can't be competitive now. Guys are just able to move software along too fast. Uh, Cooking all your cakes from scratch, maybe not the thing to do. That's just my opinion at this point. But I love MT4. I love some of the platforms that are out now because you're able to pop some things on a chart really quick. But the message is to not forget, like, what this is all about, where it all starts from. And that's why I'm adding these numbers together. And that's what we were talking about right there with Yogi Bear. Now let's pop up a chart. I got the Euro USD. This is a 5-minute chart. Um, I'm gonna put a an SMA on here. I'm gonna go down the trend. Gonna go over here to moving average. Okay, I'm gonna put 24 on. No, I'm sorry. I'm gonna put 25 on. I love the squares. We all know I love the squares. If you watch a few of our videos by now. Okay. Now, let's talk a little bit about settings. This is a 25 simple moving average. This is a 5-minute chart. Of course, this average is going to be lagging because remember when we put those 4 numbers in a row just a second ago? Well, those were just 4 numbers, and even they were slightly lagging uh, relative to the average. The average was saying 8, yet the market was moving down. Point that I'm trying to make is there's no sense in worrying about uh, lagging. Anything that's based on an average, of course, is going to lag. Even Yogi Bear knows that. You know, he's not going to make a proclamation that I'm smarter than every bear because that's dynamic. You never know when a bear is going to walk in a room that's way smarter than him. That's my only point. Now, let's talk briefly about uh, the repainting. There's, of course, indicators are going to repaint. the 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 market is dynamic. If you want to know what's happening right then, go over to the right of your chart because that's where that action is happening at, and that's you're not going to be able to enter uh, back here in your chart. So you have to read on the right side of your chart. The only thing the average is going to show you is, on average, the average direction that the market is traveling. That's all. We see the market ascending. See it's even went up, even above our SMA, our 25 SMA, and we could have seen the market was trending with or without the SMA. In this case, it's very vivid. But what the average does is it just gives us a plot for the average. So now we can see, okay, we're above average, and we're pretty high. We could have seen it without. That's my point. And I hear a lot of guys talk about, well, you put all this stuff on your chart, but you don't really need it. You could just trade naked. You're not really trading naked. Are you crazy, Alfred? Maybe somebody's saying that. You're not. Every one of these candles is a representation of the ticks that came into this software. When we started, we had to build our own candles. And we weren't using third-party software like MT4. There's nothing wrong with MT4, and we use MT4 now, and I'm very fine with it. But we used to have to build our own candles. So my point is, don't worry so much about the naked chart. It's not really naked. This is all compressed data. These are candles built off of ticks. Why is there so much debate, consternation, confusion? Because it's not really necessary. We're some debates, and this is just my opinion, are like two guys arguing over apples and oranges, and they're both fruit. You might say, well, see, that's why I like to trade off of tick charts. See, I'm getting raw data. I'm getting the ticks. They're very fast as they're coming in. That's my chart. You like wrinkle bars because the only thing that matters is price. Okay, you know, if it works for you, it works for you. But me personally, I like to have the time. But you might say, well, I like to trade PA. I don't like the indicators at all. Like, you could make the argument that if you're trading off of this chart and you're looking at these candles are compressed data, and therefore you're not really trading naked. I hate to break anyone's heart. I really hate to be the bearer of bad tidings. But to some extent, you could say these are indicators. These candles, because they're compressed representations of the price data, which is fed into this software via ticks. Okay, I'm gonna get off that rant. But I think you have to kind of look at it from that perspective in order to get a deeper understanding. Well, sometimes we see we see that brand, but if you take a lot of things apart, TVs, for example, because my dad used to work on TVs, and he would sometimes say to me, Alfred, and just laugh at me and say, well, how do you think I work on all of these different TVs? When you take this baby out of this box, do you really think every company has their own factory to manufacture every TV? In fact, when you actually take these babies apart, you'll see a lot of these parts are by the same companies. The box is the brand. So that's what this video has all been about. Just a deeper study. What's here? Where's the okay? We pop a SMA on a chart, but what exactly is this SMA all about? It's just a plot of the average. Of course, it's lagging. Why wouldn't it be? If you don't want the SMA is lagging, make a faster SMA. It's still going to be lagging because it's an average. Let's do this one. I don't know. Let's make it that. Okay. Now we got a red SMA. It's a 4. Okay. It's a lot more dynamic. It's a lot more responsive. We can see this fast SMA 4. It's a 5-minute chart. So 5 minutes times 4, 20 minutes. Of course, it's going to be more responsive to the market. Sometimes people say, well, what are some good settings? Everybody that's been watching these videos know I like to use squares almost anytime I can get a chance to. But how long are you going to be in the trade? If the indicator is lagging, by how much? What can you key it off of? I know that these are 5-minute candles. I know that if I set my SMA at 4, then I'm getting a 20-minute average. I know that this is a 25 SMA. A lot of people will say, well, I got a bigger SMA because and because I have this larger SMA, it's stronger or whatever. That's, it's sometimes going to be the case, but in reality, what you have is 2 hours, 5 minutes of an average. And as averages get bigger, as you go through life, you find that, you'll have some good days, you have some bad days, but on average, your life will be pretty consistent. Inside of our body, there's something, a phenomenon which is called homeostasis, and it's the body's propensity to want to stay the same. Otherwise, you might be 100 pounds one day and 130 pounds next month. But homeostasis, which is kind of, it's similar to the average, it's that stability, and that's all these averages are. It's not that it's stronger because this is 25, it's that it's a larger sample size. Now, fast, slow. This is this is a fast for SMA crossing a slow. Of course, I could have done this with just price action and okay, I see prices going down, but by plotting the averages, I can see on average that price is going down. Here again, fast crossing slow. Could have seen it without the SMAs. It's not always that easy to see, but of course I can see prices going up. Why is this? Well, I've got 20 minutes of data here for an average. I've got 2 hours and 5 minutes of data here for an average. Of course this one is going to be more dynamic. Of course this one is going to be faster. Me personally, I'm not as worried about dynamics because when I want dynamics, I look to the right of the chart and there's nothing more dynamic than that. The market's not open right now, but that's my go-to spot for dynamics. If I had another indicator on here, of course it's going to repaint. Only time it's not going to repaint is if the particular bar is closed. Why wouldn't it? Again, right here at the right of the chart, dynamic. This wouldn't bother me because I'm just using the indicators to indicate. They're just a lens to help me visualize what I'm seeing. Hopefully a little clearer, or hopefully with a little more stability because I'm looking at these moving averages. And that's all we were talking about today. Oh, one more thing before I leave. I want to talk about setting lower settings. Let's take the RSI. I don't have an RSI on here and I don't feel like putting one on. But let's just, a popular number for the RSI is 14. Okay. Another popular number for the RSI is 7. A little bit under the weather. Given what we just talked about, 7 RSI is going to be faster. We've got that. Okay. If you're looking to, let's talk conspiracy theory. I'm not saying this is so. I'm going to share my opinion, okay? And this is my opinion. But if you're looking to sell. No, let's take it the other way. You're looking to buy, okay? You're looking to buy, and you're a larger trader. Let's just call you a dynamic trader. This right here, this is dynamic trading to the upside. What's the easiest way of, if you're looking to buy, and you push the market up, what's the easiest way to get someone to sell? To get a good bit of people to sell. One thing you can do, and yeah, this is conspiracy theory, I'm just going to share it, is to push the RSI into an overbought position. And a lot of guys are going to get in there looking to sell. And you're looking to buy. And when all these guys get in because the RSI is overbought, you're essentially selling to the dynamic trader that push the market up. And that dynamic trader is getting whatever you're trading at a discount. Larger institutional guys, when they're looking to get out of a position, and this might be conspiracy, but I've heard some of them say this. They are looking to get out based on the indicators. Only they're using some indicators totally in the opposite way. A market's overbought. Guys are selling. They're buying because it's cheaper and cheaper and cheaper as the market falls from that overbought position. And it's just accumulation and distribution. That's all that pattern is. I probably should have done a totally different video and talked about that accumulation and distribution, supply and demand, dynamic traders and technical traders. But I just don't really think there's very much to it. This is dynamic trading action. That's guys coming in and they're selling. Let's just imagine maybe RSI is on, maybe you've got a 7 RSI on, and you're looking because it's going to make your indicator faster, but it's also going to make your indicator easier to push, easier to flip. Not as much of a challenge. An easy time for a couple of dynamic traders, maybe just one, to come along and flip your indicator. It's not like conspiracy or anything, or maybe I'm sitting here talking conspiracy theory. I don't know, but if you're on a longer sample or a larger sample, it's not going to be as easy. Why make it easy for them? That's my message about that. Because it does happen. In my opinion, it does happen. I've heard people clearly state, yeah, this is what I do, and it's the opposite. It's just a little bit looking at statistics of more than 95% of the people aren't successful, profitable long-term trading, and you want to be on that 5% side. So you've got to figure out conceptually what some of those guys are doing and how some of those guys are using the indicators. And you'll see some of them stand up sometimes and say, of course not, I don't even use these. But what they're not telling you is, of course they use them. They use them to get out of positions. They use them to elicit the response from the market that they want to elicit, bullying the market at times and doing dynamic trading. That's my opinion. Now, we talked about how to get around it. We've talked about some of the patterns that you're going to see from dynamic trading. And we've talked about our good friend the moving average and repainting and what you're actually looking at on the chart. I hope this has been helpful to someone. I hope it's given someone some ideas, maybe a deeper perspective of what these indicators are, what you're actually looking at. I'm often using the 25 SMA because I know that there are some guys using Bollingers, and standard settings 20 on the Bollinger. Some guys use Bollinger at 25, and all a Bollinger Band is essentially is standard deviations plotted around an SMA. So if I just put a 25 SMA on my chart, and I'm seeing this 25 SMA go up, guys with some bully bands, they're also seeing the same thing. Their bully bands are going up. It's just that simple. It has nothing to do with me believing that I've got a bigger sample and it's stronger or whatever, because that might hurt my feelings at times, and then I might look at the indicator and say, this crap, it doesn't work, blah blah blah, or it's not strong enough, let me make it bigger. How do you think it got to the point where now, you'll hear the standard settings of 200, everybody trades around a 200 SMA. You can't turn on CNBC without hearing that 200 SMA. It's cool to look at, but it's a very lagging indicator, and they're talking about the 200-day SMA. If price is above the average price that it's been for the past 200 days, I would venture to say that you don't have to be a mathematical genius to have spotted that even without the SMAs. And I like the SMAs. I'm just, now that we've got a deeper understanding of what these plotted lines actually are, you can see that that's, if you're buying and holding, and the 200-day average maybe will matter to you. If you're trading 5-minute binds, I'm not so sure. Okay, I'm gonna finally get off my soapbox. I probably put 2 or 3 videos into one. I'm always doing that. Um, too verbose. But I hope this helps someone. Um, as always, if we've helped you, please help us. Like, share, comment, subscribe. Look at the moving averages. It's just indicators, and look at them with deeper understanding. They're not um, magic of any sort. They're just an average. Of course, they're going to be lagging, but now you know how to tune them. Uh, Maybe a faster SMA, uh, and you know what you're looking for. Faster SMA crossing, slower SMA up. Market's obviously trending up. Why? Because in the last 20 minutes, the average market's going faster to the upside than it has been if you were to look at the same frame in the last 2 hours and 5 minutes. That's all that 4 SMA and that 25 SMA is showing you. I like to use the squares, but I've given the reasons why I'm using those 2 particular squares. As always, this is Alfred for Battery Ops Tutor. Talk to you guys in the next video.